What's up YouTube? This is Foxtel Digital coming to you again with Black Girl Stocks, and this is another segment of our top 3 option plays this week, where we're just going to go over a few different trades, stock fundamentals, and different strategies that you can do to make it through. Okay, but first, if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also subscribe, click that notification bell so that you get notified anytime I upload a new video for you guys. So the first stock that I want to talk about is BABA, and that is Alibaba, and right now it's trading at $159.47. So you'll see from the stock chart that it's clearly been in a downtrend for most of the year, actually all of the year. It's had a couple of little pullbacks, but right now it's about $7 away from its 52-week low, which is $152.80. So it's really close to the lowest that it's been in a year. What I do like about this stock is that it has a very high volume. So if you look here, on Friday, the volume is 15 million. So that's pretty good. With high volume, this is definitely a play that you can see some large price movements with, which is what we like when we're doing options, whether that be up or down. So a lot of China stocks listed in the United States are getting large amount of sell pressure right now because of Beijing's crackdown. Some of China's biggest companies like Alibaba, Sohu, Weibo, NIO, and a lot of other ones. So right now this is a pretty clear bear market. Yeah, and then you can look at the stock chart and you see we had 2 previous low points at 180 and then this recent 152. So the stock had a quick pullback, rebound upward, but now you see that it's kind of starting to continue going down again. All right, so back to that price drop. What's going to be the new low? And then also you can see a clear bearish crossover with the MACD indicator, so that's a good bearish signal. And then the RSI, I mean, it's been oversold for a while, so going into next week I'm going to be bearish on this stock and I'm going to be looking for down plays. So I would really want to see the stock drop below 150, around 158, 157 before I got into a put play. And then also, if you see here, this is on the 15-minute chart, but also I'm kind of seeing some divergence with the RSI and the MACD indicators with this stock price. So you'll see right here how the RSI and the MACD are increasing, but the price is dropping. So this could kind of be a slowdown in the downtrend. So be mindful of that. Now, going to the options, for this, the implied volatility is a little bit up there for my taste. So, 60%, 58%, it's kind of high. And then also, if you look here, their premiums are kind of expensive the further out the expiration dates are. So you'd be looking at 500, 700, So for high price stock options like this with higher implied volatility, I'm going to do a credit receiving bearish play. So I'm going to be receiving premium. And for that, I'm going to do a call credit spread. Okay, so for this, I'll probably pick something a little bit closer, September 10th. And so I'll have my short leg, the one that I'm going to sell. I'll do something safe. I'll probably do maybe around 170. Oops. Sold the 170 call and then I bought the 172.5. And so for this one, the most that you'll make with this one by the 10th is going to be $51, and the most you can lose is like 200. That's something cheaper that you can do, other than just buying a put, because as you'll see here, just a put right now is going to be about $600. So, I mean, hey, it's not too bad. I'll take that. All right. And next up is good old Apple. All right. So right now, Apple is $148.60 per share, and it's definitely been trend trading for a while. We talked about this last week. So it's been between this 151 and this 145 zone. But right now, it looks like it's starting to form a base for a new run up. So look at the crossover forming down here on the MACD indicator, so that's a good. And then also the RSI is pretty neutral right here at 50. Now somebody actually left a comment on the last video when we talked about Apple, and he said that he wouldn't touch Apple with a 10-foot pole right now because Apple's been trash. And I mean, even right now, if you look at the 1-year time frame, I mean, it's looking like it's getting really close to crossing below the 50-day moving average on the yearly chart. But right now it's looking like it's forming a flag pattern. So you see right here, so that could mean a potential breakout. So it could break out up, could break out down. And then right now, Apple has a lot of stuff going on in the news right now, just with its company. So you know, the App Store, people make apps and you have subscriptions and things like that. Apple's been taking 30% of those profits from the developers who are making at least 1 million every year. Well, now Apple is going to allow app developers to give users the option to pay for subscriptions outside of using Apple. You know, this is definitely probably going to be better for users because you're probably not going to be paying as much. But as far as Apple goes, long term, I don't know. We're going to have to see, you know, how this is going to affect Apple. There's a lot of stuff going on with Apple right now, but going into next week, if we see this price drop below around 140, what is this, 147, then it could definitely be the beginning of a nice dip. So also we can see if the stock is going to continue with this pattern. So you kind of see it hits this high, have a little dip, hit this high, have a little dip. It could rip back up. I mean, we're just gonna have to wait and see going into next week. I want to say, you know, it looks like it's going to continue upwards, but just with the news and how stagnant it's been to break out of this price resistance zone, we'll just kind of see. You know, for a bear play, I would definitely wait for the price to cross below $147. Going into the options, and then they have some really nice prices. You can really do a lot with this. So Apple is really one of my favorite stock options to day trade with. For this, I would definitely do a put if the price crosses below that area, because it's really giving downtrend right now. I will pick maybe September 17th. I would do a put. I'll go with the 147. 196, you can't beat that. And I mean, it has a pretty close bid and ask, so that's good too. So I do like that. So shouts out to Apple. And the last stock is going to be BYND, and this is Beyond Meat. So right now it's trading at $121.50. And you know, it's had a pretty good size drop from $160 a little over a month ago. So if you'll see here, the last 3 earning reports for BYND have been underwhelming. So lackluster, not so hot, no. So, and then you'll also see that the price has dropped, you know, severely. Then also it's actively been trading underneath the 50-day moving average for a while. So that's this white line. That's definitely a bearish sign. And then also the MACD indicator is kind of trending right along the center line. Child, I didn't know that it got shady like this in the business world. Beyond Meat was in talks to have a partnership with Chipotle and kind of bring some of their healthier meat alternatives to the large brand chain, food chain. But Chipotle came out and said that they're making their own substitute meat instead of getting Beyond Meat. And then they said that they get their ingredients fresh honey, made fresh from farms and not from the lab. So needless to say, you know, that's really not the best look for BYND. And then also it's, you know, it's a healthier alternative, but it's still expensive to make substitute meat. So it's more expensive than, you know, raising and slaughtering animals. Oh, I'm sorry, that's terrible. So, you know, if you're bearish on this stock, I would definitely wait for the price to drop, you know, below 119. And then going a little bit closer, because this is on the 180-day. Let's go a little bit closer to the weekly chart. Even looking at the weekly chart, you see that we literally just crossed below the 50-day moving average here in the weekly chart. And then also it just crossed below both of these EMA lines here. I mean, yeah, so this is pretty good. The implied volatility is okay, but the options further out, they kind of get a little pricey. So for something like this, as far as a play, like I said, I'm gonna be bearish on it, but I would more than likely do a put debit spread to take some of that premium down. So I'll probably pick September 17th again. Now this is a put debit spread. So my sell leg I'll do at 119, and then the one that I buy I'll do 122. Okay, so boom. So I mean, hey, that took your price down from 500 to 150 to get into this play. That's not too too bad. All right, so it's looking pretty good to me. The most that you can gain with this is going to be $152, but the most that you can lose is $148. Your break even is going to be $120, so that's not too bad, you know. All right, so those are our 3 plays for this week. And then also make sure that you check out this video that I have on day trading options. So I'm going to tell you, you know, about what kind of stocks that you want to search for. My favorite day trading strategy right now, the green to red, red to green day method. That's really been doing good for me. So make sure you check that video out.